What if you move to the United States, get a good job, earn a steady income, and still struggle to rent an apartment or buy a car? Many immigrants, international students, and skilled workers experience this situation every year. The reason is simple. In America, money is not only about how much you earn, it is about understanding the financial system. The U.S. financial system works through banking, credit history, taxes, and financial records, which can be very different for newcomers. Understanding these rules helps immigrants avoid financial struggles and build long-term security and wealth. Here are the 7 most important money rules every immigrant must learn to survive and succeed in the United States. 1. Open a U.S. bank account immediately. The first rule for financial survival in America is opening a U.S. bank account. Many newcomers try to use cash or foreign cards when they arrive, but daily life in the United States depends heavily on digital payments. Salaries are usually paid through direct deposit, rent is paid online, and most services require a local bank account. Without one, managing money becomes difficult and expensive. Even simple tasks like paying phone bills, receiving refunds, or subscribing to services often require a U.S. banking relationship. Having a local account also helps you track your spending easily and manage your finances more efficiently through mobile banking tools. Opening a bank account is often easier than many immigrants expect. Many banks allow new arrivals to open accounts using a passport, proof of address, and a tax identification number. Once opened, the account becomes the center of your financial life. It allows you to receive income, pay bills automatically, avoid international transaction fees, and start building financial trust. A strong banking history also helps prove financial stability when applying for housing or services. Some banks also provide budgeting tools and financial support services that help newcomers understand the U.S. financial system better. But opening a bank account alone does not make companies trust you financially. For that, you must understand the next rule. 2. Build your credit score from day one. In many countries, income and savings determine financial trust. In the United States, your credit score plays a much bigger role. A credit score is a number that shows how responsibly you manage borrowed money. This number usually ranges from 300 to 850, and higher scores create more opportunities. Lenders, landlords, and even service providers use this score to evaluate financial reliability. Your credit score affects whether you can rent housing, finance a car, qualify for loans, or sometimes even activate basic services like utilities. The surprising reality for immigrants is that financial history from their home country usually does not transfer. You start from zero. This means you must build trust step by borrowing small amounts and repaying them on time. Over time, consistent financial behavior strengthens your reputation and increases access to better financial products. Secured credit cards and regular bill payments help build credit history. Each payment increases financial trust, while missed payments reduce it. Understanding how credit works gives you access to opportunities, but misunderstanding credit cards can quickly create financial problems. A strong credit score not only improves financial access, but also reduces borrowing costs in the future. Number 3. Use credit cards carefully. They are not free money. Many newcomers see credit cards as extra income, but they are actually borrowed money. When used correctly, credit cards help build credit history. When used without understanding, they create expensive debt. The convenience of easy spending can sometimes lead to financial habits that are difficult to control. If you do not pay your full balance every month, interest is added to what you owe. Over time, even small purchases can grow into large financial obligations. Interest charges accumulate quickly and make repayment harder. The safest strategy is to use credit cards for small expenses and always pay the full amount on time. This builds a positive financial record without creating unnecessary debt and demonstrates responsible financial behavior. Even when you manage credit responsibly, another surprise often appears when you receive your first paycheck. The amount you earn is not always the amount you keep, which leads to the next important rule. Number 4. Understand taxes before you start working. Many immigrants are shocked when they receive their first paycheck in the United States. The salary is often lower than expected because taxes are deducted automatically. In the United States, income is taxed at multiple levels. Federal taxes apply nationwide, and many states also collect taxes. Contributions to social programs are also deducted from earnings, reducing the amount you receive. Most residents must file a tax return each year to report income and confirm the correct amount of tax paid. Ignoring tax responsibilities can lead to penalties or legal problems. Understanding basic tax rules early helps immigrants avoid costly mistakes and manage their income properly. Learning how tax deductions work also helps you plan your finances more effectively and avoid unexpected payments later. After learning how income works, many immigrants face another important financial challenge, especially those supporting family members abroad. Number 5. Compare money transfer costs before sending money home. Many immigrants send money to family in their home countries, but international transfers often include hidden costs. Traditional banks may charge service fees and offer unfavorable exchange rates. As a result, the amount received by your family may be much lower than expected. These costs can significantly reduce the value of your earnings over time. Many people focus only on the transfer fee but ignore the exchange rate difference, which can quietly take a large portion of the money being sent. Different transfer services offer different fees, exchange rates, and delivery times. Comparing these options helps protect your earnings and ensures more money reaches your family. Digital transfer services sometimes provide faster delivery and lower costs than traditional banks. Some platforms allow you to track transfers in real time, improving transparency and security. Small savings on each transfer can create significant financial benefits over time. However, even careful spending and smart transfers cannot protect you from unexpected financial emergencies, which is why preparation becomes the next important step. Number 6. Build emergency savings before investing. Life in the United States can be unpredictable. Medical expenses, job changes, or unexpected bills can create sudden financial pressure. Without savings, even one emergency can lead to debt and financial stress. Unexpected situations often arise without warning, making preparation essential. The cost of healthcare, housing repairs, or temporary unemployment can quickly overwhelm those without financial protection. An emergency fund provides protection and stability. Saving several months of living expenses reduces financial stress and protects your future. This financial safety net allows you to handle unexpected situations without relying on loans or credit. It also gives you peace of mind and financial confidence during uncertain times. Many immigrants focus only on earning more money, but real financial security comes from preparation. Once you build stable savings, you can focus on growing wealth through long-term financial strategies and investments. Number 7. Start investing early to build long-term wealth. After building banking access, credit history, and emergency savings, investing becomes the next step. Investing allows money to grow over time through long-term financial growth. The U.S. financial system offers opportunities such as retirement accounts, employer programs, and stock market investments. These tools help individuals build financial independence and prepare for the future. Understanding basic investment options helps immigrants take advantage of opportunities available in the American financial system. The most powerful factor in investing is time. Starting early allows small investments to grow significantly through compounding. Waiting too long reduces this advantage and limits potential growth. Even small monthly contributions can produce meaningful results when invested consistently over many years. Consistent long-term investing helps immigrants build financial independence and long-term security. Over time, disciplined investing can transform small savings into substantial wealth and create financial stability for future generations. Many immigrants struggle financially not because they lack ability, but because the financial rules are unfamiliar. Once you understand the system, opportunities expand quickly. Opening a bank account, building credit, managing taxes, sending money wisely, saving for emergencies, and investing consistently can transform your financial future. Understanding how money works in the United States is not about working harder, it's about learning the system and using it effectively. These 7 rules provide the foundation for long-term success in a new country. Understanding money in a new country can feel overwhelming, but learning the system gives you real financial power. This channel explains complex financial ideas in simple ways to help you build a secure future wherever you live. If you want to be smarter every day, like and subscribe.